So here's an interesting play for you. What about a golf course? What about buying a golf course for a speculative investment or for a cash flowing investment? I have a beautiful golf course across from me here. Just driving around, looking at options and opportunities. I've had a number of people recently, interestingly enough, reach out to me and ask me if I were interested in buying a golf course. So should you look into buying a golf course? So let's take a couple of seconds and think about that. We've got the driving range over here on this side. So should you buy a golf course? So, you know, golf courses are a very difficult business. There was a time when you could make some money in a golf course. They were profitable. But in this day and age, it's an extremely difficult business to make any money in. It's a very overhead intensive business. It takes a lot of money to run a golf course. You need a lot of rounds of golf. You're not going to make any money in the pro shop or in the restaurants, contrary to popular belief, unless you're the only game in town. And even then, it's extremely difficult. So a golf course, if it's profitable, about the best you can expect to do, in a nice little hole here, about the best you could expect to do is probably 10% net income on a very expensive acquisition. I mean, golf courses typically trade 1 to 2 to 3 times gross revenues, depending on the real estate, depending on the location and the type of course and the condition, things like that, and whether or not it's a distressed situation. So there's a number of things that come into play, a number of factors that come into play when buying a golf course. But at the end of the day, you're not going to make any money buying a golf course unless you just buy it extremely below market. And you can do a little value add by cleaning it up, restoring the course, renovating the course, bringing in a brand name, turning that thing around, and then flipping it to a fund or a REIT that owns golf courses. If you're buying a property that has a golf course with it, let's say you're buying a resort hotel, or you know, there's a community development that you're doing, then the golf course is an amenity. It's a break even. It's just an amenity like a pool, like tennis course, like anything else. So you got to factor that into the cost of the equation of the overall asset. Let's say you're buying a hotel and it's got a golf course with it. You know, the golf course is just an amenity. So what you want to do is you want to add that revenue line item to the pro forma, along with the expenses that are specific and related to that golf course, and it'll wash out at the end of the day. But you still need to reflect that in your pro forma so you can see what those costs and expenses are. And again, that's just going to be something that's going to be an amenity for the guests staying at the hotel. So golf courses are tough. They're very difficult. You need to be an expert in that space to make that work. You got to have some sort of a unique selling proposition. Golf is on the decline. It's too expensive. Unless you can put in place some sort of recurring revenue model and give people a reason to come play, and you can get a monthly fee out of them that makes sense, you know, that's where a golf course can work. But it's going to be a very high capital expenditure, high operational cost, very high overhead, low profit margin, very difficult business to make work. So there's a lot of other things out there that you can invest in and do. You can invest in a passive investment and make 10% on your money. So there's no point in going into a golf course, taking all that risk, all that time, energy, and effort for 10%. It doesn't make any sense. There's a lot easier ways to earn money and make your money out there. So be careful if you're looking at a golf course.